You guys must be busy. You must have had a busy night overnight, Brad. What happens on a currency desk when something like this happens?
Yeah, it definitely creates a lot of noise, a lot of tension, a lot of volume, a lot of clients asking questions about what's going on. Clearly, you have to react right away and put on your positions and get your risk right as soon as you can. You know, last night's move was sort of subtle in a way, right? It was only about 229 pips in terms of the fixing that they do every night. And that was a signal that definitely spooked the market. The market was already looking for China to potentially, or dollar China to potentially take a run at that 7 level. And the moment we had that bigger fix, the market took the run at the 7 level and just never looked back. And we saw a flurry of activity around that. So it was pretty exciting times for sure. Kind of following through into New York morning. It's a little more quiet now, and it was a little quieter in London as well. But definitely a flurry of activity in Asia.
So I ran through at the top of the hour some of the concerns that can happen when you've got the Chinese making this kind of symbolic move past 7, capital flight, higher dollar borrowing costs for companies in debt, you know, questions about the resiliency of China's economy. How much of that do you think is actually a real worry right now?
All those things have to be taken into account, and I think that's part of the reason why we likely won't see much of a follow-through from China on this move, right? I think this is a shot across the bow, but they don't really want to upset the apple cart too much. I think in their minds, stability is better than a devaluation, you know, at least at this stage, right? They have monetary policy they can use. They have fiscal stimulus they can use. They have a lot of other tools. So right now, I think they would rather have stability. And, you know, the fear behind that is simply capital outflows, panic in the market. It just creates a lot of noise for their economy that they don't really want to have to deal with at this particular moment. So you do a little shot across the bow. You get the currency above 7. It definitely sends the right message, and clearly they had the reaction from President Trump. And then they can kind of sort of take it from here. And that's what I think is going to happen.
So how significant is then, in your opinion, the risk of capital outflows at this point?
I don't think it's a big risk at this point. You know, last time we went through this was August 2015. We all know that. And what you had then was basically 2 back-to-back days of the fixing rate going above, 1,100 points per day. That was quite significant. That's a very big move. It definitely scared people. You know, this move last night was 229 points on the fixing, which isn't that big. And in fact, in May, only a few months ago, we had a night where there was over 300 points in the fixing, but it was sort of floating under the radar of their retaliatory tariffs. So, I think this is a big enough move, but, again, they don't want to upset the apple cart. The outflow story is real, and it could be potentially pretty damaging if it starts to gain steam again.
You know, it's hard to ignore the fact, Brad, that this is all happening while these massive protests and strikes are happening in Hong Kong. Do you see that as linked? Is it part of a bigger China risk right now? And if so, what's the connection?
It's definitely part of a bigger China risk. You know, I think when you're one of the people on the show earlier was basically talking about how China is sort of backs against the wall. There's a lot of things going on, right? You have Hong Kong protests, you have Taiwan, arms deal, you have Trump constantly on the Twitter feed. And the economy in China, they're trying everything they can to make sure it stays on a growth path above 6% if they can keep it there. So they have a lot going on. I think the Hong Kong story is definitely a part of the narrative, and that it's probably part of the reason why they can't go full steam on any sort of currency devaluation, because there's too much other factors to pay attention to, and the last thing they need is just sudden outflows and worries about their currency. And if you remember last time in 2015, the global central banking community and the global leadership in the G20 were very seemingly upset with China's move there because it really destabilized markets. And I think they kind of learned their lesson. So, this way they did a little subtle move, and they can kind of back off on that story and then sort of keep going, behind the scenes with trade negotiations and other things. But they have a lot to deal with for sure, and it's definitely part of the broader package you're looking at with China right now.
And then on the U.S. side, my question, Brad, is can President Trump do anything about this particular issue? Can he call Secretary Mnuchin and say, you got to step in, you've got to weaken the U.S. dollar here, especially against China? And then can he call, John Williams at the New York Fed, and can they actually do something?
Technically speaking, they can do something for sure. I mean, in terms of the letter of the law, he could theoretically make that phone call to Mnuchin and start some sort of intervention program. But I think you're going to run into the issues mentioned earlier, which are how are you going to intervene? Exactly what are you selling the dollar against? You can't do that in the local Chinese market, so you're basically stuck with the offshore market. The Fed could disagree with the move and sterilize the flows, which offsets the impact of it. I think the last thing Trump wants is egg on his face, right? If he starts down the road of actually intervening, that's a risky gambit, because if it doesn't work, you're going to look a little silly, and I don't think Trump wants to do that. So I think doing what he's doing now, creating a lot of noise, putting pressure on China, which in fact puts pressure on the market and the Fed, which then puts the Fed into a posture of dovishness, I think that's sort of working for him. And I think if he can get the Fed to get way more dovish again, back into sort of a 50 cut or something along those lines, it'll take pressure off the dollar, add a boost to the economy. That's really what he's angling for, in my opinion.